Welcome back to another episode of Medical Money, the podcast where we help you, healthcare professionals, learn finance and money. My name is Kirk Roberts. I'm an ER nurse, a financial educator, and a licensed financial representative.
And I'm Ben Chandia, a firefighter, advanced EMT, and also a licensed financial representative.
Guys, we have a special little thing today. So we actually received an email from our medicalmoneycash@gmail.com, and this comes from an ER tech whose name is Duane. He states, Kirk and Ben, can you help me understand in a clear and simple way how an IUL works? Some people say they're the best type of insurance policy or account, while others say there's are hidden dangers as it's not a direct investment in the market. Please clarify and simplify it for me. Duane, I want to say thank you very much for listening. Really appreciate that. And thank you so much for this email. And all I can say is how serendipitous. Because actually, strangely enough, we're going to be talking about this specific IUL or Indexed Universal Life Policy in our next episode in excruciating detail. So, yeah, like I said, Duane, you're actually talking about Indexed Universal Life. Like I said, it goes by many different names. Popular stuff like infinite banking, be your own bank, right?
All sorts of stuff. Right. Yeah, Duane, this is awesome timing on your part, man. Okay. So we're, like Kirk said, we're going to talk about IULs in specific on our next episode. Okay. Today we're going to kind of do a brief overview of other types of insurance policies that you guys might see out there. Okay. And so, yeah, don't worry. We're going to be breaking down things bit by bit for you on the next episode.
Excellent. Guys, today we're talking about our financial house again, our foundation, that income protection that we talked about. And we actually, last time we talked about term insurance. Today we're going to be talking about a financial product that's heavily pushed on professionals like yourself, and that's called cash value life insurance. Now, as a reminder, let's get one thing clear right from the start. The sole purpose of insurance is protection and never about investments. But too many people are being sold life insurance policies under the promise that it can be also used as an investment strategy.
Yeah, it's a cash value life insurance policy. Okay, it's a type of permanent life insurance. Okay, now it's going to include two components. Okay, there's going to be a death benefit and there's going to be a savings, sometimes pushed as an investment account that grows a cash value in there.
Now that sounds really good in theory, but here's the reality. The returns are slow, the fees are high, and the structure is complicated. And if you die, the beneficiaries only get either the death benefit and not the cash value. Wait a minute. That money goes back to the insurance company?
What? Yeah. So you're paying a lot higher premiums, okay, than you would for something simple like a term life insurance policy, okay? And you're not getting more protection, but you are paying extra for features that maybe not even going to serve you.
Guys, let's talk about the elephant in the room. People just don't like talking about death and the possibility of facing their own mortality. So this is why actually people procrastinate about getting life insurance. They're like, and with that being said, life insurance is sold, not bought. Now wait, what does that mean?
Can you repeat that, Kirk?
Life insurance is sold, not bought. Now, that means that those who sell life insurance life insurance policies that are cash value are not putting the needs of their client first and are looking at the commissions they will receive for doing the cash value policy.
Interesting. Yeah, that's why it's so important to be working with someone who's licensed, okay? Who's licensed financial representative, okay, or also known as a fiduciary, okay? Now, fiduciary is someone who is legally and ethically obligated to put your best interest first, okay? Not their commission, your interests are put first, okay? It's kind of like a financial nurse, okay? Someone who has a duty to care for your health above all else, right? That's how important it is. Not just to make a commission. Like Kirk, if I were to tell you, okay, if I give you $5 for giving Toradol in the ER, how many people would have Toradol?
Everyone's getting Toradol.
Everyone's getting Toradol, okay? Right. That's how you guys need to look at this, okay?
Ben, now before we break down these four types of cash value policies, I want to give you a scenario to help you better understand and illustrate how cash value life insurance policies work. Okay, I'm going to call this the funny bank.
Funny bank, got it.
All right, welcome to my bank, Ben. We're going to call it CKY Bank, and I'm gonna have you open up a bank account. We're all good, ready for that?
Let's do it.
All right. Now, before we open up this account, I have some conditions that you have to agree to prior to opening up this account.
Okay.
All right.
Let's do it.
You're good? All right. Number one, you will have a life insurance protection and a built-in savings account. Now, a portion of your premium pays for the insurance and a portion of the rest of it goes to the savings-like account. And that grows over time. Now, these premiums will be about 8 to 10 times more expensive than a term policy. But that should be okay, right?
I mean, as long as I'm saving my money, then yeah, that makes sense.
Okay. Number two. Okay, for the first 1 to 4 years, you will have no money in your savings account. Now, this is because for those years, all the savings are going to go to pay the commissions of the agent who sold you the policy.
Wait, what do you mean?
Okay, let me give you an example. Suppose you have a cash value life insurance policy that you're paying $300 a month for. Okay. Now, $100 is going to go towards that life insurance policy. The other $200 goes towards your savings account. Okay. So after 1 year, how much would you have in your savings account?
I mean, 200 times 12, that's 2,400. So I should have $2,400 by the end of that year.
Okay, so you would think so. So in actuality, you have zero. So now wait, let's do 3 more years. Okay. So year one, $2,400, and at the end of that time, $0. Okay. After year two, you should have $4,800, but yet you have $0. Wait, year three, another $2,400. Now you have $7,200 that you put in, and you now have $0. Wait, year four, you've now put another $2,400 in, and that should be about $9,600 that you put in.
Right.
And now maybe you have about $230. So after 4 years, you've invested $9,600, but you only have $230 in the account. Do you still want to open the account?
Hell no.
Right. Okay. Well, wait, Ben. I haven't told you the other requirements yet.
Okay.
All right. Here we go. So another requirement, this is number 3, is that I'm going to put your money into a savings account of about 1 to 4%.
Oh, okay.
But 1 to 4%, you're good with that, right?
I mean, if I have to.
Okay. So, we'll see how much you like after that. Now, number 4, you can actually borrow your money at 4 to 8% if you need to borrow it. And it might take me 6 months to give you the money that you want to borrow, but you can borrow your own money at 4 to 8%.
Wait, I have to borrow my own money?
Yes, and that actually leads us to number 5. And number 5 is you can borrow your money, but if you die before you pay back the loan, I take the remaining loan that you owe out of the death benefit I give your family.
Okay.
All right, let me give you an example. Let's suppose you have a cash value life insurance policy with $200,000 death benefit. So when you die, family gets $200,000. And you've accumulated $60,000 in that savings account that I'm giving you at 1 to 4%. Okay, now you borrow $50,000 from that savings account at about 4 to 8% for whatever you need it for. I don't know. Now, during that time you borrowed that money, you die in an accident. Now remember, you have that $200,000 death benefit from the life insurance policy. So how much money do you get back?
Well, if the policy's for $200,000, I should have $200,000.
You would think so. However, your family gets $150,000 because you borrowed $50,000 from that and didn't pay it back. Sorry. Right? Okay, Ben, last thing. If you die and you have your $200,000 life insurance policy death benefit, and you have $60,000 in your saving, and you're taking out no loan, so no loan at all. Now, let's suppose that you pass away. How much does your family get?
I mean, it would be $260,000. $200,000 plus my $60,000 I've saved in there, $260,000.
You would think that, and that actually leads us to number 6 requirement, which is when you die, you either get the death benefit or the savings account, not both. So the company keeps your savings money if it's less than the death benefit. You do not get both.
What in the world?
Right. So Ben, you want to bank with me? Come here to Sin KY Bank.
No. Guys,
this is the premise of all cash value life insurance policies. Now, I know there might be agents out there going, whoa. If you have a properly structured cash value life insurance policy, you're totally good. No, guys, they're not. This is the worst financial tool that exists. So let's kind of break down each of these cash value policies.
Yeah, guys, remember the sole purpose of insurance is protection. Okay, again, protection, not investments. Okay, Insurance is over here, investments over here. We're separating the two, okay? Let's protect first, and then we'll start investing.
Right.
Okay.
So guys, first one, whole life. Now this is actually the most common type of cash value policy, otherwise known as permanent insurance. It offers a fixed premium, guaranteed death benefit, and a small guaranteed return on your cash value. But it's extremely expensive. You could pay up to 5 to 15 times more than a term policy for the same coverage.
Yeah, guys. So that extra money that you could be investing elsewhere, with better growth, fewer fees, and really with more control that you have over your money, that whole life is often being sold to people who don't understand what they're really even buying. It's crazy. Guys, so the second one is universal life insurance, okay? We're going to talk about IULs here in a minute, but universal life is a little bit different, okay? Universal life offers some flexible premiums, okay, and a death benefit. Now, it sounds more modern and customizable, okay, but the cash value is going to depend on interest rates. Okay. If rates start to drop, your policy might not even be sustainable, okay, unless you pay more out of pocket every month.
So that flexibility could actually backfire on you guys. If you don't stay on top of that policy, your policy could collapse and leave you with nothing.
Nothing.
All right, guys, next one here is the Index Universal Life. This is the one that everyone's talking about. So the IULs, or Index Universal Life Policy, are linked to the stock market, like the S&P 500. It's not to a specific stock or investment. It's to the index. So you're told that the upside of the market is there without much downside. That's what they sell it as. Oh man, you have all the upside of the market without any of the downside. The truth is, there are caps on how much you can actually earn, and those caps can limit your growth. And there's a floor, so you don't lose money in a down year, but you're also exposed to a cap in a good year, right? So we're going to go over IULs and extensive details so that you guys can understand this.
Yeah, and guys, guess who gets to on the good years, right, where there's all that gain? Guess who keeps the rest if the market does do well? That's right, your friendly neighborhood insurance company. Okay. Also, the fees for IULs can be sky high, and really, it's just hard to understand. Okay, it's like reading the fine print on a hospital bill. I'm sure everybody reads those. But again, you're still paying those high fees. You're giving up any real investments that might be available to you. And in exchange, you're getting this watered down version of a benefit that really just benefits the insurance company and not you.
Yeah, for sure.
Okay, so next one is VULs, okay? These ones are variable universal life, okay? Now, VULs let you invest your cash into this sub-account, if you will, okay? Kind of like maybe a mutual fund, right? Now, you're taking on the market risk, okay? So if the market does well, great. If the market does well or bad, well, not so great, okay? You're the one taking on that risk, okay? And if your investments lose money, guess what? So does your policy.
And yet again, the fees are high. And these policies are so complex that most people have no understanding about how they work. Now, that's dangerous when we're talking about something as important as your financial future. Guys, why do people even buy these policies? Well, because they're being sold aggressively by agents that can earn large commissions. Their sales pitches they have are very appealing. In other words, be your own bank, infinite banking, tax-free growth, retirement income, lifelong coverage. I mean, on Instagram, it's a daily barrage of people trying to push these IUL products and telling you how phenomenal they are.
Yeah.
Once again, come to Sin KY Bank.
That's
right.
That's bad. Okay, guys. What they're not telling you though is that usually these policies often take 10 to 15 years just to break even with the amount of money that you're putting in versus the returns that you're getting. Again, 10 to 15 years just to break even, okay? That's not a sound investment, right? That's a long and extensive commitment with, little to no return.
Exactly so.
Yeah, so guys, if your goal is really to have that financial protection for your family, get term life insurance, okay? It's simple, affordable, gives you that coverage, that peace of mind that you need.
And then take that extra money that you would have been paying for a cash value policy and put that difference into a low-cost index fund, or our favorite, the Roth IRA, right? Yeah. Or the retirement account. Your growth of your wealth will actually be personalized to you and transparency, and you can control it.
Guys, that's really the key there, okay, is having that financial control. That's really what financial independence is really having, or I guess financial freedom is you controlling your money, not others controlling it for you.
Now, I know there's some of you out there thinking like, well, when does a cash value life insurance might make sense for someone? For us personally, never.
No.
But there are some rare instances, like in estate planning and maybe some high net worth individuals, or like business succession planning, where a cash value policy might make a role in this. I don't know.
Yeah, and really, guys, for the vast majority of us healthcare workers, these policies are overpriced. Really, they're unnecessary. They overpromise, underdeliver. They lock up and tie up your money in products that, again, you don't really have full control over. Yeah, that's not good.
Guys, I'm going to say it one more time, and I know you hate hearing it, but the sole purpose of insurance is protection and never about investment. So, and if anyone tells you otherwise, like they say in The Princess Bride, life is pain. Someone says differently, they're trying to sell you something. If people are trying to sell you these policies, they are trying to sell you. They are not looking out for you. They are not looking out for your family's future, and they want a commission. Go to someone who's a fiduciary and wants what's best for you and your plan.
Yeah, guys, so please make sure that you know what you're buying and why. Okay, why are we even doing all of this? Why are we going through all this headache? Okay, your financial plan should be based on facts, not marketing hype. Okay, or not on trending TikToks or anything like that. Okay, it's going to be customized to you and your needs.
Guys, thanks for being here today on the podcast again, and please don't miss an episode. Subscribe, share this with another nurse, doctor, EMT, anyone in healthcare that's actually looking to learn how money works. Maybe they're great at saving lives, but maybe not that great at saving money.
Yeah, guys, and please, if you have any questions, any topics that you want us to talk about on here, please send those to medicalmoneycash@gmail.com. Be happy to hear from you.
Duane, thanks again for sending that question. Awesome. That actually segues right into our next episode, which will be the IUL. Guys, does this make sense?
Or does this make dollars?
All right, we'll see you next time. Thanks so much.
I'm looking for a man in finance. Trust fund. 6'5", blue eyes. Finance. Trust fund. 6'5". I'm looking for a man in finance. Trust fund.